Hey, traders, Akil Stokes here, Chief Currency Analyst and Head Trading Coach over at TradeEmpowered.com. And thank you once again for joining me for my Forex weekend review video. If you are one of my many returning subscribers, I just want to say thank you. You guys have done an awesome job of not only pushing me towards my goal of reaching 25,000 subscribers by the end of the year, along with 1 million views, but you have created a community that is second to none. I'm not sure how many of you guys read through the comment section after each video, but there have been some amazing comments. There have been some great conversations, and you may not know this, but many of my Periscope and many of my blogging ideas come from the questions and comments that you leave below these videos. So keep it up, as well as keep liking and sharing, and let's just continue to grow this support system for newer traders and experienced traders who are looking for that sense of community. If you are brand new, this is a weekly video that I do, sometimes talking about technical analysis, sometimes talking about trading psychology, but no matter what I decide to do, the goal is to leave you a little bit more educated about the Forex market and trading in general than you were coming in. In today's video, because I did 2 trading psychology videos already this week, in today's video, we're going to take a look at some technical analysis. I am on the Euro Aussie right now. And before I do that, make sure you guys sign up for this. One of our professional traders and another trading coach over at Trade Empowered, Charles Miles, many of you know him. He has a webinar coming up on Saturday, May 7th called the 90% Trader, where it's teaching you how to be better than 90% of the traders out there. This is going to be a live webinar on Saturday at, I believe it's 9 a.m. Eastern time. So make sure you sign up. If you can't make it, make sure you sign up anyway. That way you get emailed the recording so you can watch it at your leisure. But I am being told that registration for this event closes at 10 o'clock on Friday. So you're going to want to go ahead and do that now. I'll put a link underneath this video, or you can also just click TradeEmpowered.com/90 and it should take you there. There you go. Almost forgot about that. We had a lot of questions about that in the live room this morning. All right, so let's do a little bit of breakdown on the charts today. I'm looking at the Euro Aussie mainly because, well, tomorrow is non-farm Friday. So I want to stay away from the Euro, not the Euro pairs, the major pairs. I want to stay away, especially from the dollar pairs, mainly because any type of analysis I provide for you today may not exist tomorrow after we get our jobs number. So I want to pick something that may have a little bit more stability. Now we do have an Aussie monetary policy statement coming out tonight. Not sure how much that's going to move the markets. They already cut their interest rates earlier in the week. The Asia session is a little bit thin, so we may see some movement. But I think regardless, this pair shows a great example of how to do some top-down analysis. So the first thing I'm looking for on this pair is to see what is the market doing. And recently we've been in consolidation. For you guys that are maybe unfamiliar with how to read a trend and the new structure high, new structure low principles, we have a great video on our website called Into the Gray that goes over that. But to keep things simple, if price action is moving from the bottom left of your screen to the top right of your screen, we're in a bullish trend. If it's moving from the top left of your screen to the bottom right of your screen, you're in a bearish trend. If it's going sideways, just from left to right across the middle, as you can see right now, we're going to call that consolidation. Again, you want to go and watch that Into the Gray video and learn about the new structure high, new structure low principles. But to make things simple, that's always a good way to look at your price chart. So we're in consolidation here on the daily, and you can see we've recently done something like this. The market has pushed down. We've double bottomed. Boom, a retest of structure right there. And we've put in a higher high, higher close above this level. So again, the overall trend is still in consolidation, but our most recent move was a break above, close above. So what I would be expecting here is a retest of structure and a chance for the market to continue higher. Now, if we're going to retest structure, the question is, where is that retest likely to come to? And there's a few different trading opportunities we can take advantage of here. The first is going to be a technique that we teach for free on our website called the 2618 trade. And essentially that means bringing a Fibonacci retracement, waiting for the market to retrace to that 618 right down here, and looking to buy it up in anticipation of a retest of previous structure high, stops going below the double bottom. Now, there's also a trend continuation trade here. Now, they're both looking for the same thing. The difference is the entry point. Now, when I'm looking for areas of where I can possibly get involved in a trend continuation trade, I want to look for areas where the market pauses at. And I'm going to keep deleting my charts here. I've got a thing for clean charts. I want to look for the area where the market pauses at. And if I'm looking at the chart right now, I'm going to let you guys pause this for a second. Can you see where the market stalls at in the midst of this this recent bullish move? There are two areas that stand out to me. Let's see if you can pick them out. Give me a chance to sip on my water, hydrate a little bit. Should be sipping coffee, but I've been going a little overboard with the caffeine lately, so trying to balance it out some. All right, that should be enough time. The two levels that I'm looking at are right here. This little red candle that comes within these two big green candles, and this second little red candle that comes within these two green candles. So again, big bullish movement, a little bit of a pause, bullish movement, a little bit of a pause, big bullish movement. Now, when we go down to the lower time frames, these levels of structure are going to become clear, but I always like to start on the daily time frame to get some perspective. So let's head down to the 4-hour chart, and you can see these two levels, those two candles, are actually outside returns on the lower time frame. So again, let's take our little line tool here. We go starting point to swing high, outside return, new structure high, outside return. And by outside return, I mean retracement pullback, the same terminology, or different terminology, but the same deal you're looking at. And then new structure high right here. So if the market's going to create another outside return, I would expect that outside return to come somewhere to one of these two previous levels of structure. And if we wanted to, we can get fancy. We can draw our Fibonacci retracement on from our swing low to our swing high. We can see a 382 at level number 1, a 618 at level number 2. Now, here's what I wanted to go over with you guys today. There's a big myth out there that in order to be a successful trader, you have to have an extremely high win percentage. You've got to win 80, 90% of the time, or there's no way you can make money. And that's just not true. In fact, and there are people that do that, don't get me wrong. There's not necessarily a correlation between your win percentage and your profitability or your expectancy, but there are some people that win that high. But most professional traders aren't around that level. I would argue that most professional traders range somewhere between 40 and 60% with their win percentage. And I'm going to show you how. Now, it's very important, guys. I'm not giving you a trading idea or a signal. I'm not saying take this. I just want to use this as an example of really my thought process on the markets, and really something that you guys can use on any different market, any different pair, any different time frame. So let's say I am looking to be a trend continuation trader. I have two options on where I can get long. The first option is to buy as the market retraces, let's say to the 382. The second option is to buy as, say, the market retraces to our 618. And I want you to take a look at our risk reward. If I'm buying right here at my first level, and let's delete these boxes again. If I'm buying right here at my first level, stops need to go below previous structure lows. I'm setting myself up with a risk reward that looks like this. So you can see it's about a 2.5 to 1 risk reward, meaning my profit potential is 2.5 times bigger than what my loss potential is, or my risk potential. Now let's say we get stopped out of this trade. The market spikes right past it and I lose. If I were to enter again, let's say at this 618 and do the same thing, let's drag this over a little bit. Usually I'm not on TradingView too much, so these tools are still a little bouncy to me. Let's say we enter right here. Let's just get stops right here below our previous structure lows, and we shoot for the same target, retest the structure highs. You can see I have about a 5 to 1 risk reward. Now, you're asking yourself, well, Akil, if you lose the first one and win the second one, that's a 50% gain or a 50% win ratio. And as you can see, if I were to lose this first one and I took a loss of, say, this much, do I not gain much more than that on the second one? Looks like I do. In fact, 1, 2, 3, right about 4. So you can see 2 trades, 1 winner, 1 loser. But that winner makes up for much more than that loser. And that's kind of the mentality you have to have. You have to have a very short memory, sort of like a quarterback that goes for the deep bomb and they throw an interception and they come back the next series and they go right for that deep bomb again. If you're going to be a trend continuation trader like this and you're going to identify 2 potential levels, you have to be willing to take it at that first level. If it loses, you get a valid signal, obviously, you have to be willing to fire off that trade again, knowing that the second win will more than cover for that first loss. And leave a comment below if you've ever done this. If you've ever analyzed an opportunity like this, you got stopped out, you saw a valid second opportunity, but you passed on it because you were still in fear. You still felt the pain of that first loss, only to have the market spike up and leave you in that, oh, woulda, coulda, shoulda had a winner, and that woulda, coulda, shoulda made up for that, and usually and next time, and I never do this. Let me know if that's been you below. But so many traders do that. They don't take advantage of that second opportunity because that first loss hurts so much. And again, a good example of how you can be a 50% trader and still be consistently profitable. Now, again, disclaimer, don't go out and trade this. If you're going to trade this type of strategy, you need to make sure you back test it, make sure it has a positive expectancy, meaning that after hundreds and hundreds and hundreds of trades, it's shown to be profitable on average. That you always want to do that with any system, any strategy that you guys trade. So that's it for today. A little chart action since we've been talking trading psychology all week. If you guys are new, do me a favor. There's 2 things I want you like, subscribe, and share. Of course, someone shared this video with you. That's how you found it. So, do another trader out there the favor of letting them know as well. But if you're new to the site, I have about over 250 YouTube videos, I think. Do this. Scroll down underneath this video. There's a section, a playlist called My Best Trading Videos. And these are the videos that I feel are the most informative, as well as the videos that you, the subscribers, have watched the most. So if you don't want to scroll through all 200 plus videos, just make sure you go down to that playlist and watch those. They're some of the best videos. And also take some time to go over to our home website, tradeempowered.com. Click the Learn to Trade tab right up here. Actually, you can scroll down a little bit and learn the 2618 strategy we talked about. And we just have free videos all over this site. Again, 2618, client testimonials if you want to see what other traders are saying, the fundamental myth trading, and then go to Learn to Trade. And there's too much information. We're giving away too much. Let's put it that way. Some of this needs to go away. So take advantage of it while it's here, and certainly sign up for this Into the Gray free 2.5-hour seminar. All right, there we go. So I'll see you guys next time. Getting ready for this caffeine crash. Good luck in the markets tomorrow doing our non-farm payrolls. And until then, plan your trade, trade your plan. I'll see you guys next week.